Welcome back to the Max Your Dash podcast. Thank you for listening, liking, sharing, and now watching. I'm your host, Steve. We are the #1 personal finance podcast in the entire world. If you're not subscribed, hit the subscribe button, leave a like, a comment. Helps the algaes because we need them.
Algos.
What's going on, guys?
Doesn't algae grow on
Algae. Dude, today,
You want to talk about my pond and algae?
wait,
God, not again.
Every episode
Not again.
the pond gets brought up.
can we just see who's going to win tonight?
Ooh.
Football's back after an excruciating 6-month wait.
I was thinking about that actually this morning, and my first thought was the Ravens are going to beat the shit out of them. But
Really?
I've since rolled that back. I think the Chiefs are going to win.
Why do you think they?
I don't know. That was just my first reaction to the game tonight. And maybe that's because that's what I want to happen.
Was last year Chiefs lost to Detroit on opening night?
Yeah, they did.
You know the Ravens are hungry. There's a lot of hype around the Ravens. I'm going to pick Ravens, but I don't think Ravens are better than the Chiefs in the long run.
I don't either. I think that the reason I came out of the gates thinking that, it was the first thing I thought of this morning was football tonight, which is awesome. But,
Yeah.
I think it's because I want the Chiefs to lose.
What time is it?
That's what it is.
8, yeah.
8.
Oh, God. Dude, it took me 2 days to get through that movie, by the way. Wild movie.
Yeah.
So we'll see if I can stay up
What about
late
you,
enough.
Nate?
What about me?
Chiefs, who's winning?
I just said Ravens.
Oh, you said Ravens?
I said I think Ravens win tonight, but the Chiefs are better in the long run.
Yeah.
Not a hot take.
Not a hot take. Great
Who's
opening
home?
night game.
Who's home? I'm taking the home team.
The Chiefs. Because
All right, I got the Chiefs.
Yeah. They got the ring ceremony,
Who
the
you
whole
got?
thing. The Chiefs, yeah.
Chiefs.
I don't know if you guys know this, but the last two, at least, we could maybe go back further in time and fact check this, but the last two home opening, home team, ring ceremony teams have lost.
Have lost?
Yeah.
Was it because it was the Chiefs both times?
Nope. Last year was the Chiefs. They lost to Detroit. The year before that was the Bills when they beat the Rams.
Really? Chiefs were? I thought it was always the Super Bowl winner that opens up. Oh, the Rams.
That's what I'm saying. The Rams won.
No, that was 3 years ago.
Oh, shoot.
Yes,
You're right.
yeah,
So
3
maybe the
years ago.
Chiefs did win 2 years ago. I could be wrong.
I can't remember who they played. But yeah, I know what you mean. I know what you're talking about.
No. I am right. Because tonight's the home opener.
Yes.
So the last two have lost tonight.
Yeah.
I mean, is that
He's
a
right.
trend?
That could be. All right. Before we get into what we're talking about today, let's do some Max Your Dash moments. If you're new here, a Max Your Dash moment is a time you are feeling true joy and happiness. Could be something big, could be something small. You know? These are the things, this is what we're all about.
I'll go.
Go ahead.
We're coming off of Labor Day weekend. We did a little family trip out to Port Bay, right on Lake Ontario as well. It was a great time. Beautiful views, beautiful house.
What a sunset.
Great sunset. Mark and his family came out. It was wonderful.
Oh, that's where you guys were.
It was awesome.
Cool.
I was going to do a selfish one,
You could just do the same
which
one.
I feel like I always do. It kind of was cool. I did birdie 1, 2, 3, and 4 the other day. It was cool. But
Dude.
I gotta get, so I'm taking 2 here, I guess.
Yeah,
Selfish.
Jesus.
Had a really good zoo trip for the first time.
Oh.
We've been to the zoo a few times. However, every time until this one, I had to carry him the whole time. This time, finally, I didn't have to. So it was cool.
Nice.
Nice.
We saw, 60% were alive, the animals.
My gosh. I don't like the zoo.
Oh, it's so sad.
But dude, if you go to Animal Kingdom,
Yeah, that's a
that is
little better.
incredible.
Yeah.
Yeah,
Have you
that's
been?
that's like the top tier of zoos, right?
It's gotta be. I mean, there might be a better one, but it feels like they're actually wild there.
Yeah.
It's cool.
And
Oh,
did
yeah.
you know that zoo members get in a half hour early?
Yeah.
You mean early?
Yeah, half hour early for the zoo members.
Jeez.
So we were like 4th spot in the parking lot. We got to see the polar bear eating. Got to see a massive
Polar bear?
tortoise.
I've never seen a
Walking.
polar bear there.
Polar bear was eating too. It was kind of cool.
Jeez.
Yep.
Oh my gosh.
Grayson loves
But you
polar
have to
bears.
get there at 9:30 to see that. Then
Right.
it was a human zoo on the way out. It was so packed.
Really? I was about to make fun of the fact,
Dude,
like,
it
why
was
do you want to get there
so
early? There can't
packed.
be that many people
Oh
going.
my god, dude! You know how like the ride in, there's like a pretty long trail.
Yeah.
Like, it was all the way, cars all the way back there.
Wow.
It was ridiculous.
They're raking in the cash over there.
Yep.
Is that the only zoo in Rochester?
How about you, Steve?
I had a trivia night at the bar with some of the boys.
Which bar?
Which bar
The
do you
bar?
think? Yeah, the bar.
Are you good at trivia?
I didn't participate.
Oh.
My thing wouldn't work. It's like on your phone, but it was fun.
What were like the topics?
So estate planning was one of them, and I was so mad because it was like,
what?
This word power of what gives, and I'm like, are you kidding? I could have gotten this.
Who chose the topics?
There's like a game master,
Oh, okay.
But he essentially takes old recycled Jeopardy jokes, but that was one of the categories. It's like estate planning for 500.
Huh.
Another one was like territories in Alaska. I mean, obviously
know
none of those. I don't even know where Nevada is. I could like kind of guess.
Vegas.
Well, on the map I'm talking about. Trying to like pick it out. It's like near California. It's one of those. I'm not great at trivia, but it was still fun.
Lindsay's really good at trivia.
Really?
It's weird. It's weird.
Dude, we're talking about a fatty topic today, like a fad. I think this is like one of the good things to become a fad. I think it's bad because it's created a lot of gurus that probably spread misinformation, but this is like a very big fad in today's day and age. Financial freedom in your 30s. Is it really possible? We're not going to BS you like most people will and try to get that clip. We're going to tell you if it's possible and if it is, what you got to do to get there. Because, I mean, doesn't that sound great? Mm-hmm. We talk about financial freedom a lot. And I actually kind of talk about this with clients is I stop using the word retirement because it kind of sucks. The word retirement sucks because people always like think about 65. So I always phrase it as work optional instead of retirement.
Yeah,
and
that.
People like thinking about it like that as opposed to retirement. Because when you think about retirement, you're like, I'm old. And it's like in your head, you already have like a specified date. You know what I mean?
Yeah.
Of what it is. But it's not like that as per like a lot of our episodes.
Just to clarify that, we're not talking about work optional in your 30s, right?
Well, what is financial freedom?
We're going to have to define that today.
Yeah. So I guess like what is is financial freedom work optional? That's what I think.
I don't.
Really?
And I think that's why Mark's asking in your 30s. Because I don't think it's realistic to be work optional in your 30s. I mean, there's some outliers. There's some outliers, probably.
Well,
like if you started a business and you sold it, Mark Zuckerberg. Yeah.
Yeah.
Okay. So that we can end the episode now.
How old's Sam Altman?
Sam Altman. Oh, the AI guy?
Yeah.
ChatGPT guy? I don't know. He's got to be.
He looks young.
Well, no, I don't think. I'm talking about if you're. Maybe you're right.
39. I think it's more like a mindset. Financial freedom in your 30s is like you don't worry about money.
Okay.
But it doesn't mean you're work optional.
Okay. So no work optional because that's not. Tell the people it's possible.
If you're work optional in your 30s, you crushed it. You
built a business and
sold it for a lot of money.
You could have really low expenses though. What if your expenses are $20,000 a year? Because you're thinking about they got to do that for 60 years, essentially. Yeah. Yeah, which is like
that's
you're
hard.
Right.
That's hard.
Yeah.
But Ambo did just find out Sam Altman's 39. He could have done it. But you have to invent ChatGPT
there's a lot. I mean, there's
whatever
basically every major business person today. Elon Musk could have done it in his 30s.
Right.
All these people probably could have done it in their 30s. But yeah, I think it's more of a mindset around you don't worry about money in your 30s.
Okay.
But I think we can get into the details of what it takes to not worry about money.
Yeah. Yeah. And why do you think this is such like a hot topic nowadays?
I think people in their 30s have more debt than any previous generation ever.
Yeah.
Yeah.
So they worry more.
And everybody hates work. I feel like, you know what I mean? The people don't want to have to worry about money, which is worrying about like work and stuff like that.
Yeah. I mean, we do, I think, as a country, work a lot more hours than any other country in the world. And, like, there's a lot of, like, status that goes into it. So I think it stresses you out a ton.
Yeah.
So getting to...
Well, it's also the phase of life. You're having kids.
Yeah.
Yeah.
You have a lot of debt. You have a lot of expenses. You have a lot of responsibilities.
So should we say this is really hard? This is actually really hard to do. There's the concept is simple, but it's not going to be
I don't think
easy.
it's, like, crazy hard. I think...
I would say 10 years ago it was a lot easier than doing it. If you're like working towards it today, you're starting now, it's gonna be quite a bit harder than it was probably 10 years ago or so.
Where does worry come from?
Worry?
Yeah.
Lack of funds.
But like you worry about a lot of things in life.
Yeah.
So it's not just about lack of
That's
funds.
a big one
like,
though.
I think worry comes from an uncertain future.
Yeah.
Like you feel like you're like one bad thing around the corner from happening and
Yeah.
you're in big trouble.
Yeah.
Like maybe you lose your job or something happens to your health or whatever. So if you think about it like that, you can start to plan out like how do you put yourself in the best position possible to not have those disasters happen, and then I think worry starts to go away.
Yeah.
Like for example, like just if you know you are on track, like you were talking about finding work optional. If you know you're on track to be work optional by the time you're 50 and you're a 32-year-old, and you actually understand it, you understand the plan to get there, that person probably has a lot less worry than someone who's 32 who has no plan to do that.
Yeah.
So that's what I'm kind of getting. I don't think it's like hard, but it's more of a mindset that it is like you got to have a certain amount of wealth already created or whatever.
Yeah. I think the hard part comes from like you can't get back time, and if you want to do it by your 30 like by your 30 you have to start, and like you can't start at like 25 unless you know your income is really high or whatever. But like there is a time where you actually have to start if you want to do it by. It's in your 30s, but if you were 30 and that's when you want to do it, you have to start.
Yeah.
Otherwise, it's just not possible.
Yeah.
But it all starts with setting the right foundations. Don't you think?
What's the foundation?
Starting early.
What's in that?
Starting early is probably the very first thing.
Yeah. That helps for sure.
Yeah.
But what about the person that didn't start early, like 23?
Yeah, I don't want to. That's another thing I was just going to bring up. Is I don't want to fearmonger these people, because that's what stops a lot of people from going. Is they're like, oh, I missed my point to start. There's no point in even starting. I'm so behind.
Screw it.
Which is just not true by any means. But for this topic specifically, it is true.
Yeah.
Like,
do you guys think it's like you could almost simplify this whole topic into, if you've got a really good emergency fund, you probably worry a lot less than most people.
Yeah.
It's not quite that simple, but like that's got to be in the foundation.
A good percentage. Yep. Yeah. So if the first thing that you need to do to get financially free in your 30s is setting the right financial foundations, the first thing is you have to start early. You have to start doing the things we're going to talk about early. Emergency fund and debt-free living, that's a big thing. So having the emergency fund and not having debt is a hard thing for people to do.
And I don't know how realistic it is to not have debt in your 30s. Because like, unless you're not gonna buy a house.
I think you can not have
student loans.
I think
bad debt.
Yeah, credit card.
I was gonna say, I think most people cannot have bad debt.
Yeah.
You're probably gonna have some student loans, mortgage, car.
Yeah.
Yep. So would we say good debt is home, student loans?
Yeah,
I guess a vehicle. Yeah.
Maybe a vehicle.
Those have gotten out of control too. Those have gotten out of control too.
Yeah,
like they show up all over my social media, and I'm like, man, this is like
if you wanted to
crazy.
If you wanted
go ahead.
If you wanted to pay off one of those three things first, it would be the car. You're saying from a car mortgage or student loans, you pay off the car first.
Well. Interest rate.
It does matter.
Probably is the determiner there.
But it's just what I think is really interesting is that as a society, we have, I think, a higher percentage of people that choose a large car payment over saving an emergency fund.
Oh, dude, you buy like how many houses worth of vehicles in your lifetime?
Yeah, dude.
Like if you're buying, it's insane.
Like, and that's the thing. I think we did an episode where we kind of got into this about cars and stuff like that. But like it's really possible today, right now, to have $1,000 a month car payment and not have that great of a car.
Yeah,
right.
Like what's like the lowest payment you could have right now on a brand new car? On a brand new car,
400.
Yeah,
I mean
that's if you're buying what?
That's my payment.
The Hornet.
Did you put money down on that too?
Well, I got the money from the other lease. I put like $1,000 down.
Okay. So that's just like it's interesting to me that as a society we prioritize cars over an emergency fund, but I think we would all agree an emergency fund.
I might buy a minivan now that we're talking about
it. What would you rather have, an emergency fund or a nice car? If you had to choose. Most people are going to probably say car, unfortunately.
Yeah. Oh, yeah.
Right.
But dude, you drive by like, no, this doesn't sound bad, but like you drive by a not so nice looking house and it's got like 100,000, literally right over near window. Lindsay's mom. It's nothing's wrong with the house. We drove this person owns a Tesla Model X. That's the wings SUV, right? I literally go to Lindsay, depending on when this person bought this house, that SUV was probably very close to what that house cost. Because they're like $100,000.
Which is so crazy, dude.
It's just a status. It's a feeling you get when you get in your car. It's like you feel like you have some wealth or
Yeah.
something, but it's
Yeah.
not building you wealth. It's
Yeah.
not doing anything for your financial future or your financial freedom.
Yeah.
So that emergency fund foundational item got to have it.
Yep. Emergency fund and paying off bad debt, not having bad debt, those two go hand in hand. Starting early, and this third one, I mean, at the end of the day, none of these sound sexy, but that's the point of the foundations.
Well, I think people need to get back to. I feel like I haven't had this conversation in a long time of paying yourself first and living within your means. Like, you remember how we used to just say, like, right off the top, carve off that 20 to 30%, and then whatever's left after that,
then
you
you spend.
figure out.
Yep. Save first, spend after.
Yeah,
It's hard to execute on,
it is.
you know?
Yep.
Because
So that's why 401ks are a great thing.
Yeah.
because it really is the easiest way to pay yourself first.
and you can
You can do
you
whatever.
can direct
Yeah.
deposit into an emergency fund.
We've got clients
Ambo
that
does it
do
all the time.
it into investment accounts too. Yeah.
So that is budgeting and making sure you're having
Yeah.
some sort of saving strategy that works for you, that allows you to stay disciplined over a long period of time.
Yeah, and I don't know if this gets into another part of the agenda, but if you feel like you can't do that, you got to wake up and realize you got to make some sacrifices for a period of time. Like I always think about this, I'm like, if you just sacrifice for 12 months, you will get yourself to a place where the worry that you have every day has probably got cut in half at least by just sacrificing 12 months. And you're 30 years old. You got 70 years left, maybe.
What do you think? I think one of the easiest ways to do that is literally you have to delete all your social media. That's the first
helps.
step, because
or
Dude,
only
they have-
follow like the types of people that are going to help enable the type of person you're becoming.
Like the Max Your Dash
it's the
podcast.
Like
ads.
the Max Your Dash podcast.
It's the ads really that are just crazy. Like, and then you can pay over time.
Yeah.
Pay over time. Oh man.
Yeah.
Oh,
So this is setting the right financial foundations. You want to start early, budgeting and savings discipline, and having an emergency fund and paying down bad debt. That's what the foundations of being financially free in your 30s looks like. So let's get into a little bit about like the actual strategies around what you should be doing after you have the foundations in place.
okay.
I think the easiest one to start with is investing aggressively, because you have to invest.
Yeah. You when we were just talking about why 401ks are such a great thing, because it comes right out of your paycheck, and we talked really briefly about you can direct deposit into other accounts. That's like, maybe we should talk about that a little bit more, because if you are the kind of person that you're just not good at looking at your checking account and automating money into emergency funds every month consistently, then why not just, if the 401k works for you, just do the same thing, but have it go into a different type of account. And I'm thinking of a client, I'm not going to say the name, that you and I have, who direct deposits into a taxable account, like 10% of his check, and his check varies month to month.
Oh yeah.
And then all of a sudden that thing's got a lot of money in it.
Yeah.
And it doesn't take long. It'll blow your mind how 18 months in, you're going to have more money than you ever would have had on your own. So why not just do that?
Yeah. I think that for this specifically, though, I don't think you can get away with, like, our whole shtick is always like, it doesn't matter where you start, it's that you start. We don't care about the dollar amount, but if you want to be financially free in your 30s, you do have to sacrifice and save more than the average person would. It doesn't matter that you're automating or doing, it does matter, but you have to actually do a significant amount to achieve this. It's like the next level of stuff. Do you know what I mean?
Yep. And you got to stop making excuses and just prioritize this.
Yep.
Like,
It's the sacrifice. You got to
make it the
sacrifice.
priority.
Exactly. Yep.
But investing aggressively also means you're choosing to invest this money. Like not just saving it in a savings account, earning nothing.
Right.
Yeah.
And I think a lot of people, we've hammered this point home a billion times, but like investing in the stock market is not gambling.
Yeah.
Stop thinking about it that way. Like just invest
Yep.
as many dollars as you can, put it into ownership of the greatest companies in the world, and you will be blown away at how much money you're going to have someday.
Yep. And that's why we say start early, though, because we always say the first 100K invested is the hardest, because compounding interest and capital markets don't really take over and do the magic until you're after the 100K.
Yep.
Right? Think about if you make, this is like the easiest way to think about it. If you have $1 million in a 401k or a taxable account or something like that, in the market, you did 8% that year, right? And you made 80 grand.
Yeah.
You know what I mean? Just sitting there. As opposed to if you had 10 grand, you made $800. You know what I mean?
Well,
So it's all about investing aggressively over a long period of time.
And I don't think that means the shiny object. And I will pick on crypto. I'm probably wrong. There's going to be someone that says I'm stupid about it. Whatever. I don't care. But like your first dollars invested probably shouldn't be in Bitcoin. Like,
Right.
You know, like it doesn't mean chase the shiny objects out there that get rich quick. Because that's what everyone wants to do. What's that one the dog thing? It's like a dog coin.
Dogecoin.
Yeah. Like people who were investing in that were trying to get rich quick.
Right.
Yes.
You know, and it's like that's not that you could get lucky. Someone did get lucky. But
that's going to the casino.
Right.
That's
right.
That's
not what
gambling.
we're saying by investing aggressively.
Yeah.
But it's wild. Like, so I was having a call yesterday with a client I'm working on, and he made the comment. This person's like retiring in the next year, and he made the comment, like, "Yeah, I'm up $100,000 since the last time we talked," and that was like 2 months ago.
Mm-hmm.
But it's because he's got a couple $1 million now in his 60s.
Yeah.
So what's crazy is that it could take you your whole career to get to $1 million or $2 million, but then you can earn another $1 million in less than 10 years from that point forward because of compounding interest. And it's like, who do you want to be? Do you want to be the person that gets the luxury of earning that kind of wealth in their 60s and 70s, or are you more interested in having the cars now?
And talking about the crypto things, like that's kind of dumb in our mind because we don't think there's any way to like get rich quick outside of like getting lucky. But if you're trying to do this, we're not telling you not to take risks.
Right.
We were talking this in our last episode, remember, about I can't remember, but we were like talking about like the highly effective habits of the people we've talked about that are really successful, and a lot of them are risk takers.
Yeah.
And this kind of goes in the same thing with investing aggressively in the stock market, obviously, but entrepreneurship and stuff like that, starting your own business, those are proper risks that
risky jobs. Stock options, startups.
Those are like proper risks to take. That's not like you're saying like Bitcoin or Dogecoin. You know what I mean? That could accelerate your wealth quickly.
I think those, like, on that point, the types of people who are always looking for ways to increase their income are probably more likely to have financial freedom in their 30s. So whether that's investing in passive income investments or in the stock market or starting your own business, or just like we talked about, I think it was in the last episode, about like having a goal for how you're going to double your income in the next 5 years.
Yes.
And you can do that probably through your current job.
By
adding so much value and growing your skill set, whatever.
It is kind of crazy. Income is like the income stream. So many people who have financial freedom when they're young have a lot of different income streams. You see it a lot, whether it's, and you don't know if they're BSing you because they're like a real estate mogul or something, but you do usually find when it's someone who's genuinely like financially free in their 30s is they probably have more than one income stream for the most part.
Where they have to have surplus income.
Yes. Yep.
So, all right, question: Does a passive income stream include dividends?
It should.
How much? I guess, a lot.
Like, I think, I don't know. I've been having this thought in the back of my mind about, like, actually, I probably can't say a ticker on here. We'll just call them the equity premium income funds. What if you? This is like a random thought here. You're putting 10% of your income or 5% of your income into those, letting them compound and reinvest for the next 20 years. You get that sucker to $100,000 or $500,000 by the time you're 50. It can kick off
how much in income?
$50,000 a year of income without you doing anything.
Yeah.
Remember, we used to have like rules of like 5% of your income to go here. Imagine if we knew about that.
I think you're right. Dividends do count as passive income.
I feel like Warren Buffett talked a lot about that.
It actually is.
It is passive.
It is passive.
Yeah. Yep. But again, people are there's a big lack of education on investing in the stock market, what dividends are, how it all plays a role in the whole thing. And the dividend reinvestment is going to help. Like, we're talking about financial freedom in your 30s. Dividend reinvestment's a pretty big,
it's huge
deal. Do you think Max Your Dash advisors will ever pay out a dividend?
to our shareholders.
I think
I still haven't gotten my dividends. I don't know.
We're in financials, so I would say at some point we could be a dividend paying company.
Okay, cool. So I think that's a cool way. So investing aggressively and also maximizing your income streams. Those are like actual strategies that you need to employ if you want to do this. And it's not just putting away money in your 401k. The aggressively is the part here. You have to invest a lot.
Do you guys have any success stories of clients who have created like successful side hustles? Side hustles are a buzzword these days.
Yeah, I have a client. It's not a side hustle, but he does like a second, like on top of his job, his day job, he runs like a business type deal, which I don't know if it's technically a side hustle, but the things that's changed in his finances and just his surplus having an extra income stream is crazy.
Would a side
it's a
hustle
significant amount
be considered, like if I were to get my CPA and start doing tax returns, is that a side hustle?
That's a side hustle. Wait, that's a business you'd say?
Well, it seems like very active. Are you thinking more passive type of income?
I think side hustle.
Well, no, it could be like a side business. So I think your example is too close to the nature of our business.
Oh, yeah.
Like if
I started doing laws.
yeah. No, so okay. So this is like I think it's important talking.
We had a push mower, and I was going out there and Saturday, Sundays. It's a good workout.
You might like that.
So, but seriously, like I feel like people. There's so many people who are unsatisfied with their current surplus.
Yes.
And if you sat down and you thought about that as a project, how am I going to increase my surplus? You could increase your surplus by mowing lawns.
Yeah,
you could probably save 10 grand a year by mowing lawns. That would be like, what's it cost to, what do you charge someone to mow their lawn?
Dude,
I'd probably have to pay someone like $200.
I did 8 lawns.
Adam, how much you pay your guy?
I pay him $50 a mow.
Yeah.
We do it in 15 minutes.
So if I do
15 minutes?
8 mows a day on the weekend, so 16. Okay. So that's $400 a day, $800
so
a week.
But this is my point. So now you're thinking.
So just
a week. The point is like sit down and we've hammered this, but I think it's a great thing that advisors need to talk about more. Is you can control your income.
Yeah.
You just haven't sat down and thought about it like a project, like you do other things.
Yeah. You can mow your way to financial freedom.
You absolutely can.
You can mow your way to financial freedom.
Like I remember, don't you have a friend or something like they had like a vending machine business or something?
Yeah.
I do own vending.
Dude, me and my friends always
like think about that.
Yeah. So for this trivia night, I played one of those arcade games that was in the bar, but it's one of those ones you can.
Which one? Golden Tee?
It's one of the ones you shoot a dragon.
I beat Mark and Golden Tee over the weekend.
I blew it. I blew it so bad.
So you can win money on this one. It's obviously a joke. Like I lost $20 and whenever.
Okay.
But I found out the guy who owns that machine owns all these machines and ATMs.
You're talking about those little screens that you like play the game on?
Play the game on, but it's gambling.
God, yeah.
But that's a side hustle. Like you're talking about the vending machine or that.
There's
ATM
if we sat down,
yes.
We should do a podcast episode where the whole episode we brainstorm side hustles.
Yeah.
Because there's an unlimited amount of them.
And then we each have to try one.
Here's one I'm thinking of. One of my best friends in the world started selling real estate on the side.
Yeah.
His financial situation is a heck of a lot better because of that little bit of extra.
Yeah.
And you could do that. We could come up with a million of ideas. So my point is like if you're not happy with your surplus, figure out how to grow your surplus.
And I think though it has to come back to like your why of wanting to get to financial freedom in your 30s, because doing stuff like that, you have to sacrifice your time.
Yeah. That means
like
you're
exchanging your time now
that means
to
you're
then
working
have more
than
time
9 to 5.
later.
You got to be okay with 9 to 5 doesn't mean now you're not done working. You got to do more.
You got to choose to prioritize this over whatever the opposite of this is.
So maximizing your income streams, investing aggressively. I like this: frugality and lifestyle choices. So we always talk about living below your means. This is definitely dependent person by person. But again, if you want to be financial free in your 30s, you have to do some sort of sacrifice. But we always talk about lifestyle creep, or what is it? Like if you, what do we call that? Like
Keeping up with the Joneses.
Yep. Yeah. So whenever you get a pay raise, normally what people do is then lifestyle inflation, that's what's called. Then they start just spending money in accordance to their new paycheck. Right. And that's why people usually end up living paycheck to paycheck is because they're living the lifestyle that their paycheck allows them to. Imagine if you never increased your lifestyle every time you got a pay raise. Yeah. And that's what you have to do with this.
Yeah.
While also being frugal. If you can keep getting pay raises and maximize your major income source while keeping expenses low, but also never increasing your expenses, that then allows you to invest more money.
Yeah.
Yeah, and you might have to say no to things that are kind of painful.
Right.
You know, if you got to cut back playing golf with your buddies because it's $100 every time you go, that's painful to say no to your buddies. But what's more important to you?
Right.
Is this a real trend? Minimalism?
Yeah. You ever seen like no bed frame?
No.
Like you've never seen those apartments where they do the minimalism?
No.
They have just one pan, one like a bed that's on the floor.
It kind of sounds nice to have a lot less shit in your house, a lot less clutter.
Yeah, no, that's a thing. Minimalism. I mean, that's an extreme of what I'm saying, but people do that. It's an aesthetic too.
Yeah.
Yeah.
Yeah, I think there's actually some. I'm not this person. I'm actually quite the opposite. But I love when a client's like, "I will drive this Toyota Camry until it dies."
Doesn't it just make you feel good when you hear that?
Yes.
I agree.
Especially like when you know they can afford a lot, like a brand new car with a big payment on it too.
Yeah,
I love that. But I am not that person.
Yeah.
All right.
What?
I was gonna say this is your thing.
You think this is up my alley?
This is Nate's thing. So the next. Okay, do you have another thing to say on minimalism?
How would he just put a pond in? He's gonna have fish in the pond, then he's gonna live off the pond.
That is true. You don't need a lot. You don't need a lot.
No, I was gonna say that. It's like we all did a camping trip a couple weeks ago, and like I think if you're being actually honest, this is a hot take, but if you're being honest with yourself, you probably feel just as much joy going camping somewhere cool.
Yeah.
I'm not saying my property. I'm saying like you go somewhere cool, camping by the water. It's super peaceful, whatever. You probably leave that trip with as much joy as going somewhere expensive on a beach.
Yeah. Yeah.
It's all about the people you're with. It's about the people you're with.
So it's just like it all comes back to the status games.
Yep. But to do all this, it's all about systems. What systems in place do you have to track this stuff and stay disciplined with it? So what are some tools to help you stay on track? What are some things that you can be doing?
Family CFO program.
Family CFO program. Yep, there's a plug right there. Make sure we put that in. How much is it? But there is a point, like, if you're doing all this stuff, you have to know what your scoreboard is and tracking it over time. It's so important.
Yep.
I don't know if we can name this stuff, but there's a lot of cool things that you should be using out there.
You should. The technology that exists today to track your budget and track your net worth is better than it's ever been before. It makes it really easy to do this stuff.
Yep.
You don't need to have your own like Excel document that you update every month. Although that's fine too if that works for you. But the point is you got to have a scoreboard.
Yep.
And you got to have a routine to keep up with it. Because if you let a couple months go by, it's just so easy to get off the track.
So make sure you're tracking it. That's all fun stuff. So the key strategies we talked about were maximizing your income streams, make sure you're investing aggressively, frugality and lifestyle choices. Don't let lifestyle inflation happen, and then make sure you're tracking that over an extended period of time. So
I think one other thing, I brought it up right at the beginning, I want to hammer this point home, is financial freedom in your 30s is a mindset, and it's about eliminating worry. And so what eliminates worry is all the stuff that we just talked about after that.
Yeah.
So, and another thing is like having a plan. Like if you feel like you have a plan to achieve your goals, maybe you don't even have that great of an emergency fund right now, but people who feel like they have a plan to have that emergency fund in 16 months and have a plan to be out of that bad debt in 8 months, those people have less worry than someone who doesn't. So
Agreed.
I think that's a big point.
I think one thing we may have skipped over is having very clearly defined goals.
Right.
Like we're talking about how to do it, but you do need to like have that SMART goal, and these are all the tools that like help you help you get there. But like it's like very specifically define what your financial freedom is in your 30s, when you want it to happen, and have it be quantifiable somehow.
Yep.
Right.
Love that. Is that good?
Well, I think we should talk about some of the trade-offs of doing this. Because,
Mm-hmm.
the benefits of not having worry, stress, all this great stuff. You don't have to worry about money. You can live life on your own terms. You can spend more time doing what you want to do. Like, the benefits are great, but what are the trade-offs of doing this? And we've sprinkled it in a lot. There's a lot of sacrifice that a traditional 20-year-old is going to have to sacrifice if you really want to do it.
I'll play that devil's advocate of like, well, I don't want to sacrifice my 20s and 30s
Exactly.
and then wait until I'm old to be able to enjoy this. I've heard that.
Yeah.
I've heard that.
And that's a completely fair, I feel like that's a completely fair argument.
Yeah.
I don't have anything bad to say about that.
But we also we talk about max your dash, and I think we always try to make the point that like maxing your dash isn't just like having fun all the time if it means you're putting yourself in financial harm. Like, it's the ability to have fun and do amazing things and feel joy and be fulfilled and be able to do it with as little financial worry as possible.
Yeah.
But that is a trade-off. Like I used the golf example.
Yeah.
It is hard to say no to stuff, but I think everyone would agree they'd rather have financial freedom.
Yeah.
Right. Well,
Because it's not like it's a permanent thing. Like, you'll never be able to golf again. It's like a temporary sacrifice that you'll have to make.
Well, because I bet if you interviewed all these people that are in their 40s and 50s and asked if you could go back and do it the financial freedom way, they would probably say yes. Like, no, they wouldn't be like, oh, I'd trade all those experiences I had. But most of them would probably be like, yeah, I'd probably sacrifice some time to be in a different position than I am today. Probably most people.
Or it's it's football season. Go ask people, would you rather have had all that money you spent in the last couple of years on FanDuel and DraftKings in your savings account right now, or was it worth it?
Go spend $30 at Barbell on 10 chicken wings, whatever it costs there, or make them at home.
But the barbell is just that's what it is.
I'm a barbell
I
guy.
need to go back there.
Wait, can I ask just?
I think this burnout thing's a real thing too. Like, this could take a toll on you. Like, if you start this path when you're 21 years old and you are on this like grind until you're 35 because of this goal, I think you could get burnt out from it.
100%.
Like, it could really weigh down.
There's some freaks out there though.
Yeah.
There's some freaks out there though that love the grind and are immune to that. But 100%, that is definitely a risk of being burned out.
Then again, if let's say instead of 20% of your income needs to be saved and invested, it's got to be 30%. If you do it from day one and you just always do 30% of your income, maybe it's not.
Dude, I bet you got to be.
But also, you got to be clear, like, why is that goal so important to you?
Right.
If you get burned out, it probably means like maybe that goal that you thought was important to you is not really the goal.
Yeah.
Right. Because if your why is strong enough, you really don't get burnt out, right? Is that what you're trying to say?
Yeah.
Yeah. It is. I think though, to do this, this is probably. And tell me if I'm wrong. You probably got to save/invest like 40 to 50%.
You might have to, at least of like your net income.
Yeah, that's what I'm saying. I don't think you can get away with saving 20% for 10 or 15 years. You got to save more.
No. Yeah, that's not going to work.
Yeah.
Well, to get to work optional,
Yeah.
you're probably right at a young age.
Yeah.
But if you're trying to get to work optional, if you don't mind, because not everybody wants to retire at 45 or 50.
Right.
If you want to get to work optional at 65, you could definitely save probably 10%.
Yeah.
Yeah.
But I think it's really. It's the emergency fund, because that eliminates all the short-term worry. Like, the worst worry people have is like when they're like, they don't know if I lost my job, if I could pay my bills in 3 months.
Yeah.
So emergency fund gets rid of that.
Mm-hmm.
And then I think it's simply like, you feel like you have a plan to achieve all of your goals that are most important to you.
Mm-hmm.
And so whether it's 40% or 20% or 10%, depending on your goal, you just need to know you have a plan to hit your goals.
Yep.
Can I test your love for the Bills here with this question?
Can I name every offensive lineman?
No.
I'll go.
Would you give up the ability to ever have financial freedom? Let's say you don't have it right now. If the Bills won the next 5 Super Bowls straight,
Wait, say this again.
you give up the ability to ever be financially free. but the Bills win the next 5 Super Bowls straight.
I can't do it.
Really?
I can't be financially free for the rest of my life.
Yeah.
Sorry, Bills. I love you, but I got a kid now. I got another kid on the way. I can't.
Is it close? Is it close?
No.
Really?
I think if you change it, like if you can't, you're gonna have
You got
a lot of
You
financial.
have to work till you're 75.
Okay, that's a question.
You got to
now.
work till you're 75.
I'd probably take the Bills Super Bowl.
Because did you guys see that question? The part of my take guys interviewed Caleb Williams and asked, one Bears fan dies, but you win the next 10 Super Bowls. Would you do it?
Oh my god!
And
Really asked him that?
They asked him that, and he didn't say anything. But he's like, "There's a button, and if you click it, a Bears fan dies, but you win the next 10 Super Bowls." He was just going like this because Big Cat is a huge Bears fan.
Yeah.
He was like, "You could kill me. I'll die for it." So that's why I asked you
That's a
that
good
question
question.
with the
That's a good
financial
question.
freedom.
That's a good
I mean,
question.
10 Super Bowls is a lot.
Yeah.
Yeah.
Screw that guy.
So I think I still think the benefits outweigh the trade-offs, but it depends on who you are.
Mm-hmm.
I don't know if I'd specifically want to do that. Like, I'm probably not the right person
Me.
to want to like actually hammer that.
Wait, what do you mean?
You talking about killing someone? Or are you talking about making sacrifices?
No, making sacrifices while you're young
Yeah.
to achieve that. Because it's not easy. Because I don't want us to sit here and say like this is for everyone. Because it's really not.
I think it is for everyone.
I'm sorry. I keep thinking like work optional and financial freedom because I think you're thinking financial freedom, like having a good emergency fund and not worrying about money. That's for everyone.
Yes.
But being work optional in your 30s is not.
That I'm talking about worry free.
Yeah. I'm sorry.
Nothing makes me feel more sad than when people are worried.
Yeah.
So I think every single human should have a plan to have financial worry go away, at least the highest percentage of it that you possibly can.
Yeah. If that's the case, then you can be rid of financial worry in your 20s. You don't gotta wait for your 30s.
True. Yeah, we could do that episode next. A lot of the same content.
I think it's okay. So I mean, is it really financial freedom though? I guess I just think about it differently. I know what you mean though, because I think about financial freedom as like you don't need money.
That's not happening in your 30s.
I think about as we've been talking through this, I've been thinking about specific clients who are like, listen, if you know you've got so much cash in the bank that you have to, and you're like, you're not like from paycheck that a paycheck comes in, like you're not even close to spending that much money.
Right.
That to me is financial freedom.
Also, I'll say this. I think Steve will like this. I think if that's what we were defining financial freedom as, is you have enough assets to not ever have to work again, that is incredibly overrated. I think those people die a lot sooner than the person that doesn't have it. Yeah.
It's probably got that like NFL effect on them where like they don't know what to do afterwards.
Yep. And the people that thrive find other businesses to get involved in or whatever. Like it is really overrated. Retirement is really overrated. You should still prioritize your finances in a way so that you because you never know what can change.
Not a huge LeBron guy, but he was just talking about that the other day. He's like, my life's just starting. He's like, I'm old for basketball, but I'm young.
Which is weird,
Yeah.
Once you're like over 27, the NFL like kick you to the curb. Think about that. I'm 29.
Oh yeah, what running back was it? It was either running back or
Todd
receiver.
Gurley's like 30, and they think this guy's like an ancient person.
Yeah.
I think I said this.
It was
to
Alvin
Amber.
Kamara.
Yeah.
Kamara's like the 29, right?
Yeah.
He's turned 29. He's like at the end of his career already.
Which is
I
crazy.
think I was saying this to Ambo the other day, but we can wrap with this. It's interesting to me. It's very interesting to me that it seems like the better things get for you, the less happy you become.
Yeah.
That's
Weird.
true about countries, isn't it?
Yeah, but I mean,
Like
is America happier today than they were in 1776?
It happened to like every empire that's ever existed.
Yeah, but it happens
Let's
to
hope
you
that
as
doesn't happen to
I think
us.
it happens like if like it's this like everyone who ever wins the lottery like
Right.
Yeah.
like it's not that is not the key to being
Yeah.
happy.
Yeah.
So let's wrap with just a combination of all this stuff. Let's review. So if you want to have financial freedom in your 30s, you have to set the right financial foundations. That means starting early, having a clear-cut budget, and having savings discipline. have a built up emergency fund, and pay down bad debt, which is like credit cards and personal loans. The actual strategies to doing this is maximizing your income streams, investing aggressively, and making the right lifestyle choices and sacrificing and being frugal. That's kind of it.
Cool.
All right.
That was fun.
Anything else?
No.
All right, guys. Thank you for watching the Max Your Dash podcast. We'll catch you guys in the next one.
Securities and investment advisory services offered through Osaic Wealth Inc., member FINRA SIPC. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth.